I can give you a very good plan which you have never seen such a plan before. Hey, hello, welcome once again. If you really want to make profit in binary trading, so there are a couple of things that you need to learn. You don't have to depend on just one or two indicators. If you are new, so you can use the indicator, but after a few months you should add more advanced things along with the indicator. I mean, there are some advanced things you should look for while trading along with the indicator. I also used to teach you only indicator strategy and strategy videos on YouTube earlier, which is still teaching a lot of traders on YouTube. But then I come to know that you cannot make profit only indicator. Along with indicators, you need to have some candlestick knowledge and some important chart patterns and trading and support and resistance to some extent. And when traders are explaining the indicators to you well on YouTube, then they analyze all this along with that indicator. They do not take trades only on indicators. Whenever you watch their videos, watch them carefully. So that is why if you want to trade, then do it professionally, or else you will be in loss. So what are the things you need to do a professional trading? We are going to see slowly, and you don't need to learn everything in binary trading. You just have to learn that much so that you can make a good profit, and that is the only things which is very important. That is what we are going to learn. So last time we saw candlestick, which was very important, and we will see that every time in the chart. And this time we will learn about trend line and support and resistance, and in the next video we will see the indicator as well as how you can use them all. So first we learn about trend line, because with the help of trend line you get to know the direction of the market, shows the direction of the prices of the market, because trend is your friend. We have to trade with the trend. That's why trend lines are so important. Now let's see how to draw trend line. So whenever there is an uptrend in the market, then you have to find two such supports from where you can draw a trend line. And when there is a downtrend, then you have to find two resistance from where you can draw a trend line. We will look at this by going to the chart, but before that let me explain a little bit about support and resistance. Support and resistance level are important point in the time where the forces of supply and demand meet. This support and resistance level are considered important by technical analysis while determining market psychology and supply and demand. When these support and resistance level are broken, it is assumed that the supply and demand forces that created this level have moved. In such a situation, new levels of support and resistance will be established. Now listen carefully from here. Support is the level at which demand is strong enough to stop the stock from falling and further. As you can see here, the prices are going up to the support level, but it is getting difficult to break it. So as soon as the price falls and comes near the support, then buyer become more willing to buy and seller are less willing to sell, and because of this the price start rising and the market start going up. And resistance is the level at which the supply is strong enough to stop the stock from moving higher. You can see that every time the prices reaches a resistance level, but it has difficult moving up. That is as the price rises and near resistance, seller become more willing to sell and buyers less inclined to buy. This lowers the price and the market goes down from there. Now let us look at the psychology of support and resistance. It is very important for you to know. Let us use some example of market participant to explain the psychology behind support and resistance. So let us first assume that there are buyers who are buying stock near support areas. Suppose the support level is $100. They buy some stock at $100, and now the market moves from that level to $110. So buyers are happy and want to buy more stock at $100, but not at $110. They decide that if the price drop to $100, they will buy more. They are creating demand at the level $100. So this was the first group that created demand at the support level. Let's take another group of traders. These are people who are uncompromising. They were considering buying the stock at $100, but didn't pull the trigger, and now the stock is at $110 and they regret not buying it. They decide that if it hits $100 again, they won't make the same and buy the stock this time. This creates potential demand. So this is the second group that creates demand at the support level. The third group bought stock below $100. Let's say they bought it for $90. They sold their stock when the stock reached $100. After that the market increased to just $110. Now they want to re-establish their long position and buy them back at the same price. They sold them at $100. They have changed their sentiment from seller to buyers. They regret selling and want to right the wrong, and this create more demand. So there are three types of traders in the market due to which the support level is created, and the same goes for the same regarding resistance. So now we go to the chart, and there we learn all this in real, and you will also know how to draw trend line and support and resistance, and the entry is to be taken. So here I have a draw trend line, and always remember this: when there is uptrend, then you have to draw trend line from below, which you can also call the support line, and whenever there is a downtrend, you will draw the trend line from above, which you can also call the resistance line. So here you can take a trade immediately when the market touches the trend line, or like I said the video of candlestick, you can do it anyway. Like whenever the market touches the trend line, then a green candle should be formed, and you can take entry immediately in the opening of the candle after the green candle. Now you have to decide the time frame of the trade by looking at the past history, because if I tell you the time frame of 2 or 3 minutes, then it can also be wrong, because every day the market behaves differently. So you have to decide the time frame of the trade by looking at the history of the chart every day. So as if here you have to take an entry of 1 or 2 minutes. So here is when the market touches the trend line, then it stays up for a long time. So you can take entry here for 1 to 3 minutes. So on this downtrend line also you could get trades at two places, and here a good time frame would be considered 2:30 to 3 minutes. So here a trend line has been broken down by the market, so I take a 2-minute trade here. And here the trade is won. So you also have to trade professionally. You should always do trading by making daily, weekly, monthly planning. Now if you want a video about planning, then tell me in the comment. I can give you a very good plan, which you have never seen such a plan before. So here also I have added a trend line, and here I could get a good trade, but it is too late here. So now I want a trade here. Now how do you know that here we have to draw the trend line? So the market has gone up with the first support here. After that, when the market is going from up to down direction, you can then draw a trend line immediately after then you have found a big green candle. And after that big green candle, you have to take immediately entry in the opening of the second candle which is about to open. So in this way you can draw the trend line and also take entry. Now let's look at some example of support and resistance, as this video is getting too long. Maybe you are getting bored. Whenever you will see a support in the market, you have to draw a support line there, because when the market goes down for the second time, then the chances of the market taking the same support are very high, and I have seen that happens many times while trading. Like I have added a horizontal line here, so you can see where the market took support last time, same has taken support for the second time in the market there. So when the market touches the support line for the second time, you can enter immediately, and you can do the same in the resistance. And you have to decide the time frame of the trade by looking at the previous support and resistance, like how the market went up with support last time, or how the last time the market went down with resistance. Seeing all this, you will have to decide the time frame of the trade. So by using the trend line and support and resistance, in this way you can earn profit. And you can also use the stochastic oscillator with them for more confirmation. And if you need some more information, then you can ask in the comment, and which strategy you want to know in details, definitely tell me in the comments. So see you in the next best video.